All right, let's talk about some of the most common money mistakes out there, the ones that are probably costing you a lot more than you think. But we're not just going to point them out. We're going to talk about how to fix them starting today.
So let me just ask you this, straight up. Are your daily habits, the little things you do without even thinking, secretly costing you a fortune? Because for a whole lot of us, the answer is a pretty shocking yes.
And look, this isn't just some made-up number. $30,000? That's what these exact mistakes can literally cost one person just in their 20s. It is a real-world price tag on habits that are super common. So let's make sure this isn't your story.
Okay, so first things first, we've got to plug the leaks. This is all about shoring up your foundation, Fixing how you handle the money that's coming in and going out every single day.
All right, mistake number 1. This one is sneaky. It's called lifestyle inflation, and it's basically the silent killer of your wealth. Here's how it works. You get a raise or a new, better-paying job, and almost without thinking, your spending just expands to eat up that new income. You're making more money, but you're not actually getting any wealthier. It's this thing called the hedonic treadmill. Basically, our brains get used to the new, nicer things really fast, and then we need another upgrade just to feel that same buzz.
And this chart? Man, it just lays it all out there, doesn't it? Look at this. You get a massive $30,000 raise. Awesome, right? But then look at your expenses. They jump right up there too. Your annual savings are stuck at the exact same level. All that extra money is just vanishing. You're running way faster on that treadmill, but you're not actually going anywhere.
So how do you fix this? It's actually pretty simple. You got to have a rule. The second you get a raise, you immediately, and I mean automatically, send at least half of that new money straight to your savings or investments. So if you get an extra grand a month, 500 of it is gone, invested, before you even see it in your checking account. This one little move is an absolute game changer.
Okay, next up, we have to talk about defense. Because, look, life happens, right? Your car's going to break down, a surprise medical bill is going to pop up. These kinds of financial shocks are pretty much inevitable. But having to spiral into debt because of them, that is not.
And here's your game plan step by step. First, you just scramble to get that first $1,000 starter fund together. Then, you focus on growing that into a real cushion, 3 to 6 months of your must-pay living expenses. And here's the key. Don't just let that cash sit in a normal savings account earning nothing. You put it in a high-yield savings account. You can find them online everywhere, so it's actually earning some decent interest and fighting off a bit of inflation for you.
So, we've plugged the leaks, we've built up our defenses, now it's time to cut the massive anchor that's dragging you down. And for most people, that's high-interest debt. It is the single biggest obstacle to building any real wealth.
A question I hear all the time is, should I invest or should I pay off my debt? Well, this slide makes the answer ridiculously clear. On average, the stock market might give you a 10% return, but your credit card, that's costing you 20%. You're playing a game where you're mathematically guaranteed to lose money. It's just simple math. And that brings us to this really powerful shift in thinking. Paying off a credit card that's charging you 20% interest, that's the same as getting a guaranteed 20% return on your money. Tell me, where else in the world can you find a guaranteed 20% investment? You can't. It is the single best investment you can possibly make.
So, the plan? You attack this debt. You go after it aggressively. The best way is the avalanche method. Pay the minimum on everything, but then throw every single extra dollar you have at the debt with the highest interest rate. Just one exception to this rule. If your job offers a 401k match, you have to contribute enough to get that full match. That's free money. You never, ever walk away from free money.
Okay, defense is set. Now, for the fun part. Let's play some offense. This is where we stop just protecting what we have and start actively, strategically building wealth for the long haul. And the very first defensive play is one almost everyone messes up, and it costs them a fortune. We're talking about that very first salary negotiation. Skipping this one conversation can cost you, well, you see the number, over 150 grand throughout your career. It's unbelievable. Just look at how this plays out over time. It's actually kind of shocking. That $10,000 gap in year one doesn't just stay a $10,000 gap. No way. Every future raise, every bonus, is calculated off that lower starting number. So the gap just gets wider and wider. After just 10 years, you're out over $150,000. It's a massive and totally avoidable loss. The fix here is so simple, but it takes a little courage. You have to negotiate, always. What's the worst they can say? No, but you have to try, and you don't go in blind.
You do your homework on sites like Glassdoor or Levels.fyi, you find out what the market rate is for your role, and you walk in there with data to back up what you're asking for.
Okay, we've saved the biggest, most costly mistake for last, and it's simply waiting. The cost of procrastinating, of putting off investing, is absolutely staggering. Just a 10-year delay in getting started can cost you nearly $800,000. Yeah, you heard that right.
I mean, this table right here, it tells the whole story. It's just mind-blowing. Let's say you start investing $5,000 a year at age 25. By the time you're 65, you could have around $1.4 million. Pretty amazing. But if you wait just 10 years, start the exact same plan at 35, you end up with less than half of that. That decade of your money making money is something you can never, ever get back.
So, what's the big takeaway here? It's this: just start now with whatever you have. Don't wait until you're making more money. Don't wait until you've read every book and feel like a total expert. A pretty good plan that you actually start today is infinitely better than the perfect plan that you start 5 years from now. The habit is more important than the amount.
And to make any of this actually happen, you need to know where you're going. See, I want to be rich. That's not a goal. It's just a vague wish. A real goal has numbers and dates attached to it. It's something you can measure. It gives you a why for saving and investing, and it turns this fuzzy idea into a concrete plan you can actually follow.
So we've gone through a lot, right? We've talked about plugging leaks, cutting debt, playing offense. But here's the thing, knowing all this stuff is completely useless if you don't do anything with it. So let's make one change today.
And listen, I know this can feel like a lot. Please don't get overwhelmed. You do not have to fix all 7 of these mistakes by tomorrow. The single most important thing, the one thing every financially successful person has in common, is that they just started. They took one step.
So that brings us to the final, most important question. I want you to really think about this. Looking back at everything we just covered, what is the one single change you will commit to making this month? Decide on it right now. Because that decision, that one small action, is where your entire financial future starts to change.